In today's video, we will look at the bull versus bear case for Jupiter. As I myself wasn't able to find too many positive points about this project, I have to bring in someone else who is insanely bullish and who made a video with his reasoning too. The bull case will be presented by Invest Answered. I am really curious to find out why he loves the token and eager to find out if I might have made a mistake in my analysis or missed something important. As my short is not doing as well as expected or at all, I want to challenge my previous thesis and see if I can still call this a shitcoin with a clear conscience. Definitely check out my video about Jupiter before watching this one, as I will not go into detail about things already discussed. Link in the description. This obviously is no financial advice. I just want to look as deeply into the project as possible and encourage you to do the same. On a side note, to prevent questions from occurring, yes, I banged my head. It happened while I was bouldering. Without further ado, let's now jump into the video of Invest Answers to find out if I was wrong in my previous analysis.
Hello, my people. Thank you all for coming. I started investing in Sol Alts. For the first time in my life, I became what some people call a degen. We'll explain why. But what we're going to uncover today is this possibly the best token ever or just a pump and dump? So Jupiter is an algorithmic decentralized protocol for doing everything. It's super, super exciting. We're going to break down all the stuff it actually does, but you can swap, you can do perps, leverage trading, you can DCA, you can go cross bridge. There are, I think, 6,000 pairs you can trade, and you can do it in real time with no friction. It's been my dream since 2020, after having the painful experience of working with DEXs in the past and working with wallets and paying crazy fees. It just was, it was it was nearly even better to play with Coinbase. The methodology is real simple. Take the winners of previous cycles, find something better technology, better integration, better capability, more features, more functionality, better user experience. And that's what we have here. And there's only one chain that can do all of this. And you know what that is. So that is the methodology behind this. And don't forget, only a tiny allocation to these positions. But remember, it is a very risky game to play with these things. So tiny allocations. And again, if you're holding 5 or 6 across 4% allocation or something, if they blow up, your main assets are still fine. And that's the key here.
I would actually go way further than this. I would recommend to not put more than 10% of your net worth into crypto. The rest of your wealth should be invested conventional in a broadly worldwide diversified portfolio of stocks and bonds. For the crypto part of your portfolio, I would recommend putting most money into the two blue chips, Bitcoin and Ethereum. Before we continue, I got a favor to ask. Please like for the algorithm and also consider subscribing to not miss any future content of mine. Back to the video.
Now, let's jump straight into the 10 reasons I like Jupiter. And then I'll break down all the data that backs this up as well. So first of all, this is a bit of a lengthy list, but it is absolutely the best DEX on Earth.
Really?
I even had a DEX scorecard that we managed for years, and I was never satisfied with anything I found until Jupiter came along. And it leverages advanced Metis routing to get the most efficient trade routes, etc. It's very user-friendly. Anybody can use it. In fact, after using this, and then you try to do something on Uniswap, you're just going to have a hard time.
Okay, willing to give him that point. It seems like people really like the experience of using this DEX. Keep in mind, though, that they are not audited Since my last video, they got 2 audits, but only for the perpetual exchange. Since they are just an aggregator, not facilitating the swaps themselves, this might not be as bad as it sounds, although I definitely prefer trading on a DEX with reasonable security practices. In general, using decentralized applications is still very cumbersome. That's why most people still stick to centralized exchanges like Binance. Another thing to keep in mind is that Jupiter is also paying people for using it through airdrops. So that might be another important fact to consider looking at usage numbers.
You have a huge range of supported tokens, again over 6,000 pairs. Over 500 tokens.
That's just bullshit. Fake advertising for the gullible. I mean, what does infinite token and pairs do when you can't use most of the exotic stuff due to infinite slippage?
And a diverse range of options for trading, swapping, perp trading.
Jupiter is terrible for perpetual futures. The product is a copy-paste of GMX just with higher fees. Both are unusable. It makes way more sense at the moment to use centralized counterparts. Or other protocols, definitely not these two.
DCAing, it's a one-stop shop for all your crypto needs. Also, cross-chain swapping.
Giving them credit for cross-chain capabilities is also a bit much, as this is not their product. Jupiter just integrated with Wormhole Connect, a bridge that is not their product. It's something completely different. What's right though is that it reduces friction and complexity for the user.
Yeah, it has a lot of capability. I'll dig into that in a minute too. It also has advanced features. You got limit orders. Very, very important on days like today. Limit orders. Do not trade without a limit order capability. Ever, everybody, or else you are beholden to the market and you will not be treated kindly by it.
What he's not telling you is that a limit order is not working that well on a blockchain. It's an artificial build to give the user a centralized exchange-like feeling. But it's not a real limit order, as there is no order book.
Also very high liquidity. You can move large amounts of money in an instant, and that's very important too.
As discussed before, liquidity is not amazing. True is that you have better liquidity on here than on a single exchange, as that's their function as a DEX aggregator. They still can't compete at all with centralized alternatives.
It is decentralized, it runs on the Solana blockchain, and you can do very high speed, very low cost transactions.
That's again nothing they should take credit for, as this is a function of the blockchain they are on, which is Solana, which is highly scalable. Decentralization per se is also not an argument at all. If decentralization makes sense, should be decided on a case-by-case basis and only applied where it makes sense. In DeFi, it makes sense, so it got a checkmark. However, decentralization can certainly be questioned, as the team claims 50% of the tokens for themselves.
And it's very secure, and that means the users retain control of their private keys and funds, reducing the risk of hacks and theft.
Jupiter just got the audits recently, and they are only for the Perpetual Exchange and Jupiter Perpetual Keeper, so only parts of the exchange are audited, and they can definitely not be deemed very secure based on that. I give them one thing though: Jupiter has been used extensively already and no exploits have happened yet. So they might be more secure than I gave Jupiter credit for in my last video.
And it has a great community, a really fun community. And it's funny, it's hard to imagine when you can hear grown adults saying meow to each other. It's a little bit weird.
True, there is a lot of hype around the project and the airdrop. I realized that too, reading Moonboy posts on Twitter every day or getting insulting comments for my videos on a daily basis. Community is one thing, but I heard nothing so far that convinces me that the price is not just built on hype.
It also has tons of strong partnerships. We'll cover that too in a minute. So these are the top 10 reasons, but let's dig into them real quick and explain why they are so unique and so powerful. First of all, they do work closely with lots of cross-chain projects, Allbridge, Wormhole, Atlas, Rango, etc. to enable, some of this isn't quite mature yet, but down the line you'll be able to do everything across all chains if you want. And this will be very helpful if you're trying to get stuff off of old chains in a very effective and efficient manner, because we all have crypto trapped somewhere and simply it's not cost efficient to get it back. But soon it will be.
Not sure what he's rambling about. It sounds like he wants to give Jupiter credit for being integrated with Bridges. The team didn't build anything. They use other people's infrastructure. Other projects can do that too easily. I don't see why this is a strong argument in favor of Jupiter.
In addition, the ecosystem is literally, this is just 1/3 of it, but they are the most, by far, the most integrated chain on the Solana ecosystem. So shout out to the team as well. They have everything tied into this platform, which is what makes it so usable as well.
They built nothing meaningful of their own. They just integrated with basically everyone else. I don't see why there can't be someone else who rebuilds this from scratch, also promising an airdrop and take a lot of market share from them. This might actually be a good idea. The new project could also take the opportunity to fix all the many shortcomings of Jupiter.
Let's look at some more data. This is the Solana DEX trade source. This is basically where all the trades actually come from. 65.2% of all trades now on Solana come from Jupiter. But if you take out bots, it's 84.2%. And you can see here, Raydium is second and Orca is third. But that big teal there, that is all Jupiter. Insane.
Okay. Most of the Solana volume goes through them. So what? I don't see the point. They don't earn anything as they do not charge fees for swaps. On top of that, they are also most likely the ones giving users the most incentives to trade on their exchange, aka airdrops. Don't forget, they are just a cost-free distribution point. They route the swaps to real exchanges and earn nothing in the process. The numbers don't say much. But I have to admit that if they can maintain their dominant position and users accept additional fees for their service, then this could lead somewhere. It's a big if though.
Now, let's look at some traders. You know, we always talk about the path to 1 billion users in crypto will mean, my math, you need one dApp that has 100 million users. This one already has 1.539 million, and it could grow very, very fast, especially as we go into the bull market. People are going to start using this stuff more and more. So who knows, this could be it. But I'll share more detail there, and I'm one of those traders, and I've been using this actively now for many, many months, which is great.
According to my research, the number of traders is bigger, but most likely also heavily inflated. As in airdrops, users often have many wallets instead of one big one, as many small traders with the same volume as one big trader often get way more rewards.
In addition, let's look at volume. Jupiter volume is now number one, over $1 billion today. Of course, it's been a very active day, but Uniswap is down there, 781 million, and Jupiter volume is 30% higher than Uniswap, and Uniswap is the granddaddy of DEXs out there a long time. Now let's look at, and I always talk about the Solana black hole and how everything's migrating to this place. This data will just prove it to you in a very big way. It's happening, ladies and gentlemen. So this is Jupiter versus all other DEXs. You can see Jupiter top, Uniswap in Ethereum number 2. What's really important here to notice is Jupiter only has 560 coins, but 6,212 pairs. Uniswap has 1,092 coins, but only 2,144 pairs. So Jupiter has a lot more capability. And I always say everything is a pair. So the more pairs you have, the more flexibility you have as well going forward. That's one of the reasons why people migrate there.
As you can see, Jupiter is not doing as well anymore compared to the competition. Volume is down a lot despite the market going up tons after this video was made. In the end, quality will prevail, and Jupiter securing one of the first places might have been just a short bushfire from the airdrop. His talk about the many tokens supported and the many trading pairs is nonsense, as already addressed before. Keep in mind that an aggregator naturally has an advantage when calculating the volumes, as it's channeling traffic to many other sources.
Let's look at Jupiter versus all other DEX aggregators. The specific category of Jupiter is a DEX aggregator. The Jupiter is here, and you can see it's been growing like crazy, but it is 3 times the size of the next biggest one, which is 1 inch. And again, the biggest, best takes most. We're seeing exactly that play out here as well. And you see the size differential between Jupiter and the number 2 position. And again, the number 2 position is going to shrink over time, and Jupiter's going to get bigger.
I don't see why Jupiter necessarily should get bigger, outscale all others. The nice trick of them, the airdrop is over, but others can still pull the same move. Since the video, all actors involved also picked up the pace and numbers got considerably bigger. Again, I don't see the insane benefit of this high volume if Jupiter can't benefit by creating fees. Another issue is that all the money goes to the team and not to the token holder anyways.
Let's look at Jupiter daily active users versus all other dApps on the planet. This is kind of stunning. Jupiter is top of the list with, let me try to get this number, make sure I call it out correctly. Well, daily active addresses varies. This is from yesterday, so it's 500,000. Tether is number 2. SPL tokens, Solana stuff, is number 3. What you see here, ladies and gentlemen, is Solana. It's really taking over, and that in itself is a stunning statistic. And again, early days yet.
I have no clue where he gets his graphs from. I found something comparable on DApp Radar comparing unique active wallet addresses. Jupiter is neither the top spot in the last 24 hours nor in the last 30 days. Not 100% sure what the DApp ahead of Jupiter do. I assume they are games. Although they lost first spot, these are still amazing stats. Even if you take into account that many users might have multiple accounts to farm the airdrop, the user count is impressive, but the valuation is reflecting this already. Actually, it's more than reflecting it. Users are not everything. You need some earning potential in order to be sustainable in the long term. This is missing at the moment still. I was not able to find any statistics on the fees generated. I assume the number is very low compared to others. It has to be especially low if you put it in relation to the volume, as Jupiter is not earning anything on almost all transactions going through their exchange.
Now let's look at the competitors. It is a murderer's row of competitors in the decentralized exchange space. And here you see them all. Number 1, Uniswap. Number 2 is Rune. Number 3, DYDX, etc. We will look at those 3 players, and the reason I'm going to use them is for things like relative market caps and volume and activities. It's a little bit of tokenomics to get a feel for how high Jupiter could go. The question is Jupiter better than Uniswap? Is it better than Rune? Of course it's different. It has more features, more functionality, more speed, less cost. Of course it's better.
Lol, what the fuck? This is not scientific at all. It's different. I agree on that. Not sure how much sense it makes to compare a site that's a DEX aggregator for the most part with more specialized products that actually earn a native yield and are not depending on token inflation. The additional speed is only because of the blockchain it's on, not a unique feature of their exchange. If the others deploy on Solana, they would also do well on these. Less cost is also not true, only if you take the gas cost in account. But that's also because of Solana. The perpetual product is actually terrible and worse than DYDX and other decentralized competitors.
And it's so early.
Then I hear this phrase, I usually just roll my eyes. It's so early is one of the sentences you hear all the time. It's not an argument at all. This is normally a sign to end the video and watch something else that might provide some value. But we still continue to give him the benefit of the doubt, although most of the points he made so far were flawed.
Just basically launched today, and it's going to go a long way. I'm pretty confident of that. Now we're going to spend some time with the tokenomics, because the tokenomics are a little bit simple, but also unique and also complicated. So let me break it down simply first. The Jupiter tokenomics model has 10 billion Jupe tokens. 50% are being airdropped to the community. We just had the first airdrop, and there will be 4 rounds. And that's going to take 4 years. That will make up 40%. Then you got another 10% to contributors and grants, etc. Then the team. This is important. 20% is for the current team, which vests over 2 years. Very, very important. Now, a more complex graphic of this, which will kind of break it down, which is from the team. And I'll try and explain this clearly. Although we don't have what I call an emission schedule, we can estimate it. So first of all, the team gets 5 billion tokens. But again, only 20% of the tokens will be given to the current team members. This 20% will not begin vesting until after 2 years, which means that in order to receive the Jupe tokens, the 20% of them, the existing team members must be with the Jupiter team for at least that duration. Now, that is important because that means the team is stable. They're not going to ditch their tokens, sell them, and move on to another project. They are married to this thing.
I nearly fall asleep listening to him. I agree that long vesting schedules are great to have a committed team working on the long-term development of the project. Unfortunately, the team is anonymous and they might tell you one thing and do the complete opposite in reality. There were very serious allegations against the team at token launch. Allegedly, the team dumped huge amounts at token launch, resulting in an unusual big drop when the token generation event happened.
And that's what's kind of unique and special about it too. Not only half being airdropped to the community, but also a very meager amount to the team, which is not like other projects as well.
I disagree with a lot of things he's saying. The team allocation is unusual big. I mean, just do the math at current valuations and you can figure it out on your own. Additional, the tokenomics were broken down in much easier terms by Jupiter themselves. 50% of the tokens for the team and 50% for the users. These are terrible tokenomics. You will not find many tokens with teams that greedy.
And one of the things that's really interesting today, and you saw that with how the launch happened, and I've been looking at it all day, is there was no big spikes up or down. It was extremely smooth in a very tight range. That shows you whatever they're doing with the liquidity is really working well. And of course, the insiders aren't dumping on people.
Whatever he's smoking, I want that too.
Then there's a launchpad fee. They will be turning this platform into a launchpad for lots of other new projects, which is there. And then a whole bunch of other stuff. They have other fees as well for launching on other platforms like Coinbase, etc.
I had high expectations for the launch pool, but Jupiter disappointed me again. I mean, it's not bad, but it could have been way better. This could have been the one feature making the token worth it. By, for example, regularly dropping portions of the pool to token holders. But that's obviously not what happened. They built a supposedly fair system for users and developers to support on-chain token launches, fair and transparent for all parties involved. Their docs suck very much. I mean, look at their wording. Supposedly this should be funny, instead it's ridiculous and annoying. According to them, this will not have any fucked up incentives like other launchpads. I find it strange then that 25% of the proceeds go the team. We also have Trust the team, who will keep all the proceeds first and the funds will be later transferred to the DAO. a team that supposedly dumped on its users once in the past. The function of the launch pool is to enable teams to design the price curves of the pool themselves, making every launch extremely customizable and adaptable to the respective project.
I'll share detailed notes on it later for those who want to get into it. Now, the Jupiter investors, Multicoin Capital, Solana Ventures, and Delphi Digital, again, big, good, solid players in the space as well.
No fucking idea where this information is coming from. Couldn't find anything about any investors. This would also be against the tokenomics published by Jupiter themselves. They don't list any investors, as you can see.
Community sentiment, 98% positive, 2% negative. Remember, this stat is so funny because 2% of the Earth is toxic. And they are also the loudest people, so it was kind of profound for me to see that 2% right here for this project. And you can see this on Bird Eye yourself and monitor it yourself.
What the fuck is this metric? By the way, sample size also seems not to be the biggest. Seems like I am part of the 2% of toxic people.
Now, we're going to get into the most important part. Where will the price go? And let's jump in. First of all, I'm going to compare Uniswap to Jupiter market cap. If Jupiter trades with the same market cap of Uniswap today, that would be a 5.28x, or the price would go to $3.38.
And if it trades with the market cap of Apple, it would trade at 3 trillion. This would be a gazillion X. On a more serious note, it does not make too much sense to compare market caps of projects where one has 13% of tokens in circulation and the other has 60% in circulation. A better metric would be fully diluted market cap.
Remember, we are early in the bull run. Crypto market cap is going to go to 5 trillion. And when that happens, Uniswap is going to go up in value. And therefore, Jupiter will go up in value too. So this $3.38, very, very conservative.
That's exactly my fear. This has weak fundamentals, but it could still go up a lot based on unfounded pumpermentals. I am certain that this will go down a lot based on what Jupiter has to offer currently at some point. The thing is that the market can stay irrational longer than I can stay solvent, potentially.
Considering Jupiter already does a lot more than Uniswap.
That's not true. The projects we are rooting to do a lot more. They themselves do almost nothing.
Therefore, you could argue it deserves at least an equivalent market cap. Now, next one is Uniswap versus Jupiter based on fully diluted market cap. That would be a 25.97x up to $16. But again, let's look at Rune. Rune versus Jupiter at the all-time high. Again, $3.59 would be the target if it hits the market cap of Rune, and it does so much more than Rune right now. Let's look at another one. I decided to take a combo price target here because I'm really trying to model this out and do as many comparisons as possible. I took an average market cap Uniswap and the average market cap of KuCoin and calculated a price for Jupiter based on the amount of existing tokens. That would get an average market cap. Uniswap is 3.6 billion, KuCoin 915 million. Average of that is 2.26 billion, and that would bring the Jupiter price to $1.74. Not that exciting considering right now we're trading at 65 cents, but still that's 3x, not bad. Let's look at, and again, that's assuming the price today. The market's down today. It's not that high. Market's going to go a lot higher when the markets go to 5 trillion. Remember that. Then I have a couple of other details too, which I thought I'd bring in, but I can't really compare because it's hard. One is inflation estimates. The Uniswap inflation is 6.43%, KuCoin 6.78%. I reckon based on Jupiter, 10 billion tokens, 1.3 billion is already circulating. I think somewhere between 10 and 20% will hit the market over the next year. That means at least 10 to 20% inflation on top of what we have.
Hard to take him serious anymore, then he is just making up numbers. Inflation is also way higher than he is talking about, and it will have the effect that more selling pressure will be put on the price. It's that easy. If you double the money supply, the price has to adjust if everything else stays the same.
In addition, whale holdings, Uniswap whale concentration 84.2%, KuCoin 99.51%. Guess who has given more halfway to the community. Okay, so you out of the gate, you know there can't be whale holdings more than 50%.
I guess it's fair to say that based on his statements, it's objectively correct that he is a fool. I mean, not sure how this metric is built. The number for Jupiter is also missing, so this is pointless anyways. But only because 50% goes to the community, this does not mean there will be no whale holdings. The truth is there will be tons of whale holdings, as some people will receive way more tokens than others.
And before I get into the conclusion and the summation of all the price targets, and I'll give you that in a second, a lot of people always ask where to buy it. Well, it's already listed on Binance, OKX, Bybit, KuCoin, Gate.io, you know, but I always joke, it's like, why would anybody buy this on a centralized exchange when you could buy it on Jupiter itself? And you can buy it with a lot less friction, a lot less cost.
I am really pissed by now. This guy is either a paid shill or a complete moron. The statements he's making are objectively wrong. I assume most newbies would disagree that trading on Jupiter is buying with a lot less friction compared to a centralized exchange. His statement that it's cheaper to trade on Jupiter is also objectively wrong. It's about 4 times more expensive
than these other places too. So the world is going to decentralized exchanges. There's no ifs, ands, or buts about that. And they're going to just eat market share. Look at what Jupiter did to Uniswap in just a very short window of time. Can you imagine? Once people get comfortable with decentralized exchanges, they'll never ever go to a centralized exchange again.
You can also argue about that. I would say with 95% certainty that this statement is not true either.
Anyway, just my theory. Conclusion, everybody. Fun part. Numbers first. These are 2025 potential price predictions for Jupiter. And now, if I take the average between Uniswap and KuCoin market caps, I get $1.74. If I take the average between Uniswap and Raydium, it's $1.51. If I take Rune all-time high market cap, it's $3.59. If I take Jupiter price with the market cap of Uniswap now, it's $3.38. And if I take Jupiter price with all-time high of Uniswap market cap, it is $16.58. So ignore the $16.58 one.
We are doing the good old find some random numbers again and do some random mathematical operations to come up with some moon price predictions. I feel like he's pulling the numbers out of his ass. Everything without reason and meaning.
If you take the average of the ones above that, you get about $2.56. And if you take an average of them all, you get about $5.36. So I think, you know, $2.56, that's a 4.13x. $5.36 is about an 8.6x. That's what you can expect. Somewhere between a 4 and an 8x to be conservative.
5x to 8x is his conservative estimate. Okay.
But if this thing takes off, if this DEX takes all the business, this is going to shoot up the CMC charts, and currently it's on the coin market caps at 71. It just launched 71. When you look at all the assets above 71, there is no asset that had this number of monthly active users, this number of trading volume, this amount of growth. Every single metric blows all of the ones above it out of the water. Therefore, I'm very convinced it's going to go up as long as it doesn't break down and whatever happens. So from that perspective, it is part of my Sol Alt portfolio.
Who would have guessed? Just one question left. How much did you get paid for this video?
And these are the 10 reasons I believe everybody should have a little position. So I am very, very bullish on this. Again, I look at fundamentals, I look at numbers, and this is the most striking story I've seen probably ever in crypto. Since I discovered Solana, I just look at numbers and comparisons, valuation methodologies, and see what we come up with. And I do believe it's one of the fastest horses as well. Let me know if you want to see more of these, because I do have 2 up my sleeve, which are interesting. But they won't be as good as this. I can't find anything as good as this. And that's part of my predicament, because I want to kind of keep bringing better things to the table. But when there's nothing better, you're going to get kind of stuck.
What the fuck?
After careful consideration, I'm doubling down on my previous statement that this is not the gem everyone thinks it is. I made a few mistakes though. I underestimated hype and irrationality from others. I also underestimated that this would still have that much traffic after the airdrop. Especially the transaction volumes are used as a strong argument for the exchange. True, they got a lot of users and many people are enjoying the user experience. However, I assume that this is more than priced in. According to my conservative estimates, they are actually massively overvalued. Many people think they would be a shareholder of sorts if they hold the token, but this is by no means the case. The token is actually more or less worthless because it provides no utility apart from governmental rights. Are voting rights really worth that much when the team controls the results of the poll anyways? Is a fully diluted market cap really reasonable, priced at 6 billion given the fact that the token essentially does nothing? In my world, the token should create added value. To do so, it should have a monetary benefit. Unfortunately, there is none. These are not distributed among Jupiter holders, but go entirely to the team. Despite the right to vote, a change would be difficult to achieve as the team has a lot of voting rights and the voter turnout on blockchains is generally very low. Even if a fee switch were activated, this would not help, as the fees currently generated are probably negligible compared to the trading volume anyways. A massive devaluation is also to be expected when more tokens come into the market. This will happen when the next airdrop takes place and once the team tokens are vested, or then the team decides to dump early again. Problematic is once Portal decides to charge an additional fee for the DEX aggregator service in the future, it will lose a lot of traffic from price-conscious users. It also doesn't seem all that difficult to code a copy of the exchange and eliminate the weak points, plus lure away users with the help of an airdrop. Furthermore, security is far from guaranteed due to the audits, which only cover parts of the service. The team also does not seem very trustworthy. On the one hand, it is anonymous. On the other hand, there were credible token dump suspicions at the start of the project. Let me know what you think about Jupiter. Are you bullish or bearish? That's it. Please like and subscribe if this was helpful. If you liked this one, you might enjoy one of these two videos as well.